shorten the period close, and pivot from collecting data to analysis and FEI. Thank you for joining us today. Before we get started, I would like to share some information regarding CPE credits with you. I appreciate your patience. Today's webinar is worth one continuing professional education CPE credit. Please be sure to enable your media player to hear audio. To be eligible for CPE credit, you must answer at least 3 of the 4 polling questions during the webinar and have a total viewing time of at least 50 minutes. Participants will have the opportunity to download their CPE certificate immediately following the webinar if above requirements are met. In accordance with the standards for National Registry of CPE sponsors, CPE credit will be granted based on a 50-minute hour. We are unable to grant CPE credit in cases where technical difficulties preclude eligibility. CPE program sponsorship guidelines prohibit us from issuing credit to those not verified by the technology to have satisfied the minimum requirements listed above. I encourage you today to download today's presentation, which is located in the Resources widget on the left-hand side of the screen. After the presentation, this webinar will be available on the FEI member site where you can replay and download. At the end of the webinar, you can retrieve your certificate in the certification widget in the lower right-hand corner of your screen. Below the Resources widget is the Q&A box. Please feel free to ask questions throughout the presentation, and the speaker will answer as many questions as he can. Now, it's FEI's pleasure to welcome Matt Hopkins.
Hello, everyone, and thank you for joining the call today. My name is Matt Hopkins, and today we're going to talk about how to shorten the period close and try to get away from doing some mundane tasks and get everyone focused on doing analytical work that will actually help the organization. A little bit about myself. As you can see in the slide that you're looking at, I have over 25 years of financial and consulting experience. I actually started off doing accounting and audit work. I am a certified public accountant, and after I did accounting and audit work for about 8 years, I started to do technology, and over the last, I guess, couple of decades now, I've been doing ERP and what we call corporate performance management consulting. And I've done multiple full life cycle implementations for both ERP and corporate performance management. And I'm with a company called Perficient, which I joined back in 2010, so almost 10 years now. And a little bit about corporate performance management. Really what corporate performance management is, it's focused really on period close activities, what we can do to enable a more effective and efficient period close, as well as doing planning and budgeting activities, being able to do actual versus budget comparative reporting, being able to also do custom reporting based off of that data, and really more of an analytical type nature work than what you might see in what we call a transactional system or an ERP type system. So a little bit about today. We're going to talk, I'll give you a brief introduction to Perficient, the company I work for, and then we're going to talk about some of the challenges that we have in the accounting office, especially as we look at the period close and the activities that go with the period close. We're going to talk about some of the potential solutions, both technology and process oriented. Then we'll wrap it up, and then we'll talk about some any questions that you guys might have, and we'll go from there. A little bit about Perficient. So Perficient has been in business since 1997. We have over 20 offices here in North America. In addition to those 20 offices in the States, we also have development centers in China, India, and Mexico. Last year's annual revenue was just under $500 million. We have over 3,500 employees or colleagues, as we call them. And one of the metrics that we're really very proud of is our repeat business rate. So we're running at about 95% repeat business. So of our current customers, 95% of them, we've done some type of work before in the past. And we are publicly traded on NASDAQ. And we have a variety of services that we offer. We have partners that we partner with on the technology side, including Oracle, OneStream, IBM, and Microsoft. So those are some of our larger practices that we have. So once again, if you have any questions on Perficient, feel free to look us up or reach out to us afterwards. All right, so moving on to the next slide, we're going to talk about some of the challenges of the accounting office, and this is all, once again, around, how do we facilitate a faster and more effective period close? And so looking at this next slide, this is a quote that I like. It's not unusual for finance to spend 90% of its time getting information into relevant business systems, validating it, and getting it out again for reporting, leaving limited time to actually interpret the data. So really what we're seeing is that the time to gather data, get it into the system of record that we want to be able to report from, being able to validate that it's the correct data, make any adjustments to it that we need to, and then be able to get it into a format that we can present, we spend the bulk of our time doing that. So we don't really have time to understand the data or do analysis on it. We're just spending time trying to collect the data and then capture and present what that means. So today, we're going to talk about ways that we can try to eliminate or at least mitigate some of those redundant and rote tasks and focus on how we can free up time so that we can analyze the data. So looking at some of the challenges of the accounting office, frankly, people don't really view accounting and finance as being a strategic advantage. It's not like when Boeing is trying to sell airplanes that they can go and say, well, listen, we closed in 5 days, so you know that we're a great company for you to partner with and to buy our airplanes from. That's not what they talk about. But it is a very important part of what we do on a daily basis to make sure that our organizations are able to present their data, be accurate, and be able to forecast what's coming down the pipe. So some of the objectives of the accounting office and of the finance organization is to provide those timely financial results. So I mentioned being able to close quickly. So try to close as quickly as possible with accurate data. Lower cost, which we're frequently asked to do more with less, as we often hear. And then what we're seeing is in the marketplace, especially with our customers now, is not only be able to provide external financial data, but also be able to provide managerial data. So data that can be used to manage the business. And we'll talk a little bit about some of the challenges around that, because typically accounting is responsible for external facing reporting. However, now we're seeing really a big trend to swing back to it's got to be management reporting as well, so that we've got to be able to get that data, make it available to everyone. All right, moving on to the next slide. So, as I call it, the cost center stigma. It's not always easy to get funding to improve your financial close. Once again, not a market differentiator, not something that's going to go on the billboard about your organization. So today we're going to talk about some of the things that we can do to improve the financial close, lower those costs, get close done in a faster manner. Some of these things are going to be process driven. So it's going to be us making the decisions about what we need to do from a process perspective. Some of the things that we'll talk about today are going to be technology driven. So I'll talk about some of the technologies that are available and what they can do to help the accounting and finance office close and present data in a faster and more accurate manner. Now, process changes by themselves can sometimes be hard to do because let's face it, a lot of the times we know that we need to do things that are process oriented, but we wait until that technology change comes to force us to do those process changes. So regardless of the direction you guys decide to go on any potential changes, that process is always the ultimate driver. So as I talk through maybe some technology options today, remember, and I'll try to call this out, what the underlying process change would need to be. And then as we look at this, I'm going to focus really on three main areas: closing the books and reporting, doing periodic reconciliations, and then the actual management of the period close process. So we'll talk about those things. And then also, I'm not necessarily going to talk about, how to create a business case if you do need to do some type of a technology enhancement. But think about, as we look at these things, and I'll talk about some metrics of if you did want to use technology, the added cost, how you can justify that cost. And we'll talk through some of the ways that we can do that. And as we talk about technology, I'll say I'm not necessarily going to talk about what we call on-premise technology versus cloud technology. You'll hear people talk about, oh, my business is in the cloud. We do all of our accounting in the cloud. And for those of us that have been around for a while, being in the cloud is essentially hosted solutions. So I've got to admit, I had a client who they were moving to the cloud, and they were asking, so our data, it's in the cloud, so how do we get the data out if we need to see it? They were thinking that somewhere out there in the internet, their data was floating around instead of actually sitting on a server at their service provider's facility. So keep that in mind. When we're talking about data that's in the cloud, it's really sitting on somebody's server somewhere in a very secure facility, and people are able to access it and maintain it, and it's kept up to date that way. So on-premise typically means people think of it's in the basement. I know exactly where our servers are. In the cloud, it's really in someone else's basement, but it is a secure location. Once again, I won't be talking about too much on-premise or cloud, but just know there's big push to go to the cloud for cost and for maintenance reasons and from a personnel perspective as well. So I won't talk really too much more about it, but just keep that in mind. All right, so moving on, we're coming to the first polling question. So as you look at this, do you have well-developed applications for performing these items? Your financial consolidation and elimination, your monthly reconciliation process, managing the period close, managing master data, such as your chart of account structure, If you can, please answer all those questions. I'll give you guys a little bit of time. I'll play my Jeopardy music in my mind as you guys go through and get a chance to answer those. All right. I'll go ahead and let's take a look at what our next results are. Okay, so 43% have financial consolidation and elimination applications that they feel are well developed. 50% have monthly reconciliation processes. 28%, 29% really feel like they've got something that's able to manage the period end close. And then managing master data, chart of account maintenance, 43%. So that's a pretty high number, which is it's great to know. So and then we've got 18% think that they can provide a yes or no option for those choices. So it's interesting that people say that. Arguably, the financial consolidation and elimination is typically where we see the biggest emphasis, because being able to capture your operating results and reporting those is very critical. So, I would say maybe that number seems low to me. So maybe there are some opportunities that we can talk about during the session for you guys to be able to leverage some of the tools that we're talking about, some of the processes, and maybe be able to leverage that. As we look at the monthly reconciliation process, 50% say that you've got a good tool or application for doing that. I should have clarified Excel doesn't really count as a good tool, although I know that a lot of people use it, and we'll talk a little bit more about that in a few minutes. And then 30% to manage the close. You feel like you have a good, well-developed application or process for that. So that's about right where I expected it to be. And then once again, managing the master data, I think that's a good number as well. So we'll go ahead and move on to the next slide. And here, from a technology standpoint, really, I want to show some of what Gartner says are some of the leading technology organizations out there for managing period close. Once again, this is very specific to managing the period close. And if you guys already have a partner of choice, then that's typically where people go. So looking at what Gartner says, that doesn't necessarily mean that the solution that you have or the technology you have, if it's not on the list, isn't the right answer for your organization. But if you're looking for a new initiative or technology to use, these are some of the ones that Gartner has recommended. And you can see up there in the top right-hand corner, which is where everybody wants to be, we've got several options. There's Oracle, Blackline, OneStream. So a lot of organizations that can provide technology for you that can help with the period close. And I'll say this now about a technology solution. Really, for period close, some of these are very easy to implement, either in conjunction with other applications or as standalone. So if you are looking to do an implementation, you don't necessarily have to do all of these that we're going to talk about today. You can do them one-off and then kind of work your way into it to make sure that this is the direction that you want to go. And we'll talk a little bit more about timing and levels of effort and some of the process changes that go with it in a few minutes. So let's talk about closing the books and reporting. And to me, this is something that's going to be kind of near and dear to my heart. And this is really kind of the consolidations and eliminations. And so before we get there, we've got another polling question. And that's, what are the biggest challenges you're facing now in your close process? And so once again, please choose all that apply. We're looking at, is manual processes, is that something that's a challenge in your close? Is it the disparate or incomplete data that is coming into your systems? Lack of visibility into the process, not knowing exactly where you are, audit compliance or compliance issues, or that your resources, your people, are stretched too thin and the timing to complete the close process is always a challenge because of that. I'll give you guys a few seconds to do that, and once again, please remember you have to answer at least 3 of the questions in order to get your CPE credit. So let's go ahead and move to the results. All right, and the winner is manual processes. So exactly, this is what we see at a lot of customers. It's those manual processes, manual workarounds that we all know that we have to do to facilitate the close process. That is a big time waster and a big challenge for the close. So the disparate or incomplete data, so 41%, that's fairly high. So we know that the data coming in, we have to augment it somehow. We have to make adjustments to it. We need to capture data, manually load it, manually combine it somehow. So that's a fairly high number. Lack of visibility into the process, I understand that, about 30%, 28%, that's kind of where I expect it. Audit compliance, that's always, and the color here is somewhat appropriate, kind of red. As a former auditor, you know, we're always looking for breakdowns in the numbers that are reported. So, you know, 15%, that means that there's some work, some, you know, important work that needs to be done maybe in that case to make sure that you are able to report your numbers accurately. And then resources are stretched thin, 46, 47%. Yep, understood on that one. In fact, I'm surprised. To me, that seems a little bit low because I know every time period close comes around, it's always a very stressful time for everyone, and we'll cover a little bit of that. And in fact, as we go to the next slide, kind of talking now about the close and period close, you know, what is the best thing that we can say about period close? It was done on time. We had no material errors, I think, because sometimes we know that there are going to be some immaterial differences that we don't care about. It's the best thing that we say about it. I only had to stay late 3 nights and didn't have to work on Sunday. Sometimes that is a good close, isn't it? And then the last one, no one was injured. We didn't have to dial 911 this time. So I certainly hope that no one gets injured during period close. But really, I mean, people just don't get too excited about having a good period close. It's not like having a record sales quarter, but it's for the accounting and finance office, it is very important. So moving on to really some of the objectives and challenges of the period close. So we're responsible for accumulating those financial results from multiple sources and with this disparate data into a comparable set of data that can be consumed by our key users that we can report on. And one of the most important things is we've got to be able to tie that back to the original sources for audit reasons. So we've got to be able to verify that these numbers are accurate. So as we talk through this, some of what we talk about for period close, I'm going to be focused somewhat on organizations that are a little bit larger, that may have external operations or operations in foreign countries, multiple systems feeding one system. So we'll talk a little bit about that. But some of these topics apply to all organizations, and we'll see why in a few minutes. I've got a slide to kind of explain that. Even a smaller organization has these challenges. They may not be getting feeds from 5 different ERP systems, but it is important that they be able to combine data, close quickly, and be able to represent or show their results. So as we look at some of the different challenges that we do have different ERP systems with different chart of account structures, which is a challenge, different currencies, and as we saw in the polling question, a lot of you guys have incomplete data sets or incomplete data that comes in that you have to somehow augment or make adjustments to get it correct. All right, so you combine that with global time zones and different calendars. Everyone in Europe is off during the summer. It makes it a challenge sometimes to be able to close within the time frame that you want to. So as we look at the close, the period close, I break it out into 2 main things: closing the ERP subledgers and general ledgers, and then consolidating results into that common set of data that can be used for reporting. And that's what we'll really be focused on today. And so here's another quote that I like, and that's: the current economic climate has also caused many companies to change in size or to enter new markets in order to remain competitive. In all these cases, consolidation and reporting form an integral part of effective management and are key to providing accurate information to investors and regulators in an evolving environment. So as an example, I had a customer that as we were implementing a software, they were asking, hey, if we needed to add a company, how hard would that be? They asked that same question the next day. And then on the 3rd day, they said, we've acquired the company and we need to start rolling them into the application. How do we do that? And it was their first international operation to include. So there was a whole new list of challenges that they had to deal with, including multi-currency, as well as dealing with folks on a different continent. So even though right now you may not have the challenges that a multinational company may have, it could be coming. So let's talk about homogeneous data. So this is something that can be a process-driven initiative or a technology-driven initiative. You don't have to have new software to get homogeneous data. You can always change your chart of account structures whenever you need to. However, it's hard to do. It's hard. We all know how hard it is to get people to change from a chart of account structure. But it's something that you can do regardless of software. So that's why it typically waits until we do a new implementation of a system before we look at that chart of account. So as we look at this first line item, we've got company 12. They're in North America region. They have an account. They don't have a sub-account. Their department is equipment sales, which is spelled out. And then their total sales is $50,000. So then, as we look at the next line item, how are these 2 line items related? Well, there's company 48, or 428, pardon me. They're not in a region, apparently, at least not from their ERP system. They do have an account, which looks somewhat similar to the other. And then, oh, look, they have a sub-account, which, you know what, those 2 sure do look like they tie together. Department 183, not sure what that is, and then 10,000 pounds. So as we look at our data, it's hard coming from source systems to be able to get data into a common view. So looking at some of the applications that are available today, using this data load and transformation tools, you're able to map disparate data into a common or into a master chart of accounts that's used at the corporate level. And this is really one of the main benefits of using a separate corporate performance management consolidation tool. Being able to load and standardize your data from different sources so that you can see it all together. So the creation of a common chart of accounts It must be succinct enough to be manageable, yet flexible enough to meet future acquisitions and venture into new markets. So really what I'm saying here is that you can make it flexible enough to answer not only your external facing reporting needs, but to a certain extent also your internal reporting needs, that management reporting. And so you can see that as my third bullet point. We are focused on external reporting, but also an important byproduct is that you're able to do some of that internal reporting as well. So you can also, through the mapping and through the tools available, be able to incorporate different currencies and perform translations to get those currencies into a common data set so that you can perform your reporting and your analysis on it. So these are things that are inherent and as part of these systems. And then also that first bullet point that I have, there's also master data management tools that can help you manage your chart of account structure that can be used in a corporate performance management tool. And they can even push that metadata or chart of account structure down to your ERP system and even to your point of sale system. So I have a customer right now that has a proprietary point of sale system that has its own chart of accounts, its own customer master, its own supplier or vendor master, separate from what the ERP one is. So they have to map that into their ERP system, and then after that into their corporate performance management system. So if you have one of these master data management tools, that can give you the tool to manage all of that in one place and then push it out to those distributed systems. So just a sidebar that the master data management tools can be used to help you in that area. All right, so let's go back to our example that we looked at before. So this first line item or first set of line items, that's our disparate data. So after we roll it into our consolidating chart of accounts, then we can get it into the correct company code. We can assign regions to it based off of where they are, give it the account. It looks like we don't need a sub-account. And now we've got a department, 183, heavy equipment, much more descriptive than what we had before. And now it's translated it from pounds into US dollars. So just an example of how you can get homogeneous data out of some of these tools. Now this next topic, looking at automated integrations from multiple sources, this is really not so much a process improvement that you can make. It is typically technology driven, but if you don't have this now, these are some of the benefits. Automated integrations from multiple sources. You're able to get data from your source ERP systems and have that data loaded to the application. It can be loaded either scheduled, after hours, when it's convenient for everyone, or it can be done on demand, because we always know during close, the controller is going to say, it's 2:30, I want to see what our results are. And you want to be able to press a button to load data, consolidate, and be able to see your results. So you have the option of doing scheduled or on time or on demand, pardon me. And then if an error occurs during day load, there's automatic notification that can be sent out to an administrator, to an accounting resource that says there's an issue, here's what it is. So something to keep in mind, some of the benefits, really automated data integrations. Now, robust intercompany eliminations, aggregation, and calculation. So this is really kind of at the core of the period close data. Once it's all been loaded, it's all standardized, you can perform your consolidations and your eliminations without having to do any manual intervention. So that having the system map the data and be able to eliminate it is a huge benefit. If you have something that is unique, and we all know that we have unique situations, it is possible to create custom eliminations for those weird situations that we have. You can be able to do these custom eliminations that will allow you to handle that. An example would be partial ownership, things like that. We had one customer where they owned a subsidiary 100%, but it was 50% owned by one of their children organizations, 30% owned by a different child organization, and 20% owned by another child organization. So we had to come up with a unique way to be able to map those all together and eliminate them correctly. These new applications and systems can allow you to do that. Also, you have the ability to do further calculations and processing of your financial results. Applications have gotten a lot more advanced in this area. You're able to generate those minority interest ownerships, any translation adjustments, be able to do your topside journal entries that you need to do. And then also, you're able to do cash flow through mapping of your actual accounts and how they're used. You can significantly automate the cash flow statement, which is something that is, it's hard to do 100%, as we all know, but it takes away a lot of the manual work that goes into doing a cash flow statement, which I know for a lot of our customers, that's a big benefit. Also, with the consolidated set of data, you have the option of being able to generate GAAP results or even doing IFRS formatted reporting for external management, or pardon me, external reporting. So some of the benefits of being able to do the eliminations in-house. We'll talk a little bit about the security. So with security, you're able to put security either on specific roles, such as what people do. So this person can only enter journal entries, and if you want to, based off of the segments of the chart of accounts, you can limit them to certain cost centers or an individual cost center. You can limit them to a certain region or line of business. You're able to apply security in a lot of different ways. On top of that, you're able to integrate it to your Active Directory. And I have listed here Microsoft Active Directory. Also, if you use Okta or some other type of verification, you're able to get it all basically in one place so that you do have those single sign-on capabilities. And then for improved controls, we have the option of having workflow that will send notification to someone when they have to do something. They do their task, hit save, and it moves to the next person. So it follows that process flow, that approval flow as needed. And then also, we have the ability to provide audit trails so that you can follow who did what to the data, so that if you have a question on, say, a topside entry, you can go in and take a look at what was done on that particular entry. All right, and then as far as multiple reporting options and other processing, so as far as generating reports, we have tools that can either generate what I call boardroom-ready formatted reports, so that you can prepare those. You can do it via XML, XBRL, PDF. You can also automate your filing of SEC data with XBRL. So a lot of options for your external formatted reporting. You also have the ability to use query tools that will provide Excel-like capabilities. Some of them actually do pull the data into Excel, and you're able to manipulate the data once you have it on your desktop. So very powerful for us accountant types. You know, we love Excel, so it's a great way to pull that data in. And then you can also use things like statistical data and other reporting tools to basically handle any type of disclosures that you might need to have for external reporting. So just some of the benefits of these close and consolidation tools that are available today. Once again, some of them are process-driven, but a lot of this is technology-driven. So now we're at our third polling question. And so the question is, are you migrating to or do you currently use a cloud-based service? Option 1, maybe in the next 7 to 12 months, and actually you can make that 0 to 12 months if it's sooner. Maybe looking to do it in the next 1 to 2 years. You currently have a cloud-based core enterprise application suite that you're using now. Cloud-based infrastructure or no plans. So I'll give you guys a few seconds to answer that. All right, let's go ahead and go to the next slide. Okay, so 13% looking to do something in the next 0 to 12 months. About a quarter of you guys are looking to migrate in the next 1 to 2 years. 23% currently on cloud-based applications. 10% on cloud-based infrastructure. And look at that, 26% no current plans to move to the cloud. All right, so that's pretty much kind of right in line with what I expected. It looks like, you know, about half of the group, maybe 60, 70% in the next 2 years will have some component on the cloud. Some are looking to kind of indefinitely stay on premise. So understand those results. All right, let's take a look here as we move forward. We're going to talk now about periodic reconciliations. So once again, reconciliations is something that we can use process for, and then something also that we can use technology for. And I'll lead in with account reconciliation is sometimes characterized as repetitive, boring accounting work. So we've all done reconciliations. Some of us have fond memories of doing reconciliations. I would guess most of us do not. So, some of the reasons are it's usually very labor intensive. It's usually done in Excel with people typing in numbers and comparing that to some subledger report or some other supporting document. Typically, all recs are done all months. Someone has to look at it. Someone has to validate it, make sure that it's correct. And even though it might be something that doesn't change, it's something that's always done. Reconciliations are an important part of the accounting department's responsibility. We need to keep them for audit purposes. So they always have to be maintained. They always have to be accessible. However, they can be very time consuming. So let's talk about some of the benefits of both process and technology improvements. Really, what we're looking at is a way to standardize the tools and process. So at a lot of our customers, we see them using Excel. However, different departments do it differently. It's not standardized. When the controller looks at a rec from one department versus another rec, it's different. So by using the tools available today, you can get a standardized tool and process that's built into the system. They're all done basically the same way, allowing the flexibility to handle differences for some of these accounts which may need something different. So it's a standardized tool that's flexible enough to allow you to do different things, but it also gives you that platform that everyone knows how to use. If someone moves from one department to another, it doesn't change significantly. And for the controller group or for the management group, it's much easier to view the data and understand what it is. So that's one of the benefits of that standardized tool and process. Another one, once again, this is not so much process, but it's a little more on the technology side. It's integrated data. With the tools available today, you can load your general ledger balances directly into your reconciliations. So no more fat fingering or loading data into an Excel-driven reconciliation. It's already in there for you when you start that rec. Additionally, you're able to pick up subledger data and load that into the same application so that you don't have to run an accounts receivable report and key in the information. That data has already been loaded for you. So this is very useful, and we'll talk a little bit about how it can help you automate some of your processes. So as we look at automated processing, you can set up rules so that if it meets certain criteria, a reconciliation can be auto-reconciled. So that means that someone doesn't have to go in and open the rec, that you're actually able to have the system reconcile it for you. So if you do, say, accounts receivable, you load the AR general ledger balance, you load the AR subledger balance, you create a rule that if it matches exactly, it'll auto-reconcile, and it never shows up on anyone's task list. It doesn't have to be opened. Now, you can also set the rule that all recs do have to be looked at, and if it's auto-reconciled and someone sees that, they just look at it, they click OK, and then they move on. Or you can set it up to, it'll go to the manager instead of a reconciler, and the manager can look and see, okay, this one auto-reconciled, it worked as expected. You click Submit, and you're done. You can also assign different priorities to it, such as if it's a medium risk reconciliation and it auto-reconciles, no one looks at it. If it's a high-risk one, you can set all the high-risk ones to be reviewed by management. So it gives you the flexibility to create these rules. You can do it within certain parameters. If it's less than $100 or 1% of the balance, if it's that close, it'll auto-reconcile. Or you can set it up so that you have to go in and look at every single one and reconcile it manually. Manually being someone has to look at it. So it's a great way to cut down on time for doing reconciliations. So talking about cutting back on time, so streamlining that processing, you can also set it up so that an individual or groups of individuals can get recs and create them and then send them for approval. So if you have an AP department, you're not dependent on just one person doing those recs. If you've got a group of 3 folks that can do recs, then you can create that group. It'll route to whoever has time or bandwidth to do recs. They can go grab any rec and reconcile it. Also, if someone's out on vacation, you can assign someone in their stead to do the reconciliation. So it's very easy to set this up so that people can perform reconciliations, and through workflow it gets routed to the appropriate person for approving or rejecting. If you reject it, it can go back to the person that needs to prepare it. A lot of different options there. So it's a great way to do it. You can also do, and now I'm kind of down here at the bottom, you can attach detailed Excel spreadsheets, you can attach external support, whatever you need to attach to that reconciliation, you can go ahead and attach that as supporting documentation. From a process management perspective, the ability to be able to manage where you are in the reconciliation process is key. Tools available today, you can go in and see dashboards that show you what reconciliations have been done, which ones are behind schedule. You can set deadlines for when they need to be done, which ones have not been done according to their deadline. You can see bottlenecks. So if Matt Hopkins is not doing his reconciliations in a timely fashion, then it'll let you know that, hey, these need to be done, and it looks like Matt is the one who's behind. So you can pick up the phone and make sure that the reconciliations are done in a timely manner. So on reconciliations, a lot of great tools to automate the process, to use workflow, and to be able to manage the process so that you know exactly where you are in the reconciliation process. So speaking of management, let's talk about managing the close process. And this is really kind of the overall, how are we doing in the close right now? We've seen this managed a lot of ways. I've seen it written up on whiteboards. I've seen an Excel spreadsheet out on a shared drive where people can go in and check boxes, virtual check-in, check-out box, when they're done doing their particular processes. But using some of the tools that are available today, you're able to actually manage that process and have visibility into it. So we'll talk a little bit about some of the ways that you can do this. This, once again, is probably more for the larger organizations, those that have the distributed workforce. I've got a client right now, they're thinking of using a tool like this. They're all located in the same office, so they just yell down the hall when they're done with something. So maybe not necessarily for that group, but for somebody with a group of people, different regions, things like that, very useful. So here's another good quote. 88% of accounting and finance professionals were negatively impacted by the pressure to close quickly. So we all feel that pressure to close quickly. Some of the tools out there will allow you to be able to see where you are in the close, and then it'll help you identify bottlenecks and what needs to be done next to get through the close process. So we do allow the same task period over period. However, each period, things can change. We might have had an acquisition. We might have a unique reporting situation. Tools available now allow you to create a standardized set of tasks, assign those tasks to people, put due dates, and then as you need to, add tasks or take tasks away from a given period. Each quarter, each year end, we all know that there are typically more tasks that need to be done. You can add those to your task list and be able to manage that process to make sure that you got everything identified that needs to be done. If there's a dependency, you can tie things together such that one thing needs to be done before the next one is done. And so it's very helpful and beneficial in that regard to be able to kind of manage who's doing what. So you can also have workflow that will, as one task gets done, we mentioned the dependencies, one task is done, it gets passed to the next person, and then to the next person, and the person following that. So a lot of options there to be able to use workflow and standardize that process. As you look at month end, managing that process, you can also have dashboards, reports that tell you where you are and who, once again, is responsible for performing those tasks. So that workflow helps streamline the process. Dashboards and reports helps you manage that process so that you can see where certain tasks are and what needs to be done next. Now, you can try to do this via a process, Excel, things like that. Difficult to do. The benefit of using the tools that are out there now is that you're able to streamline, have workflow, be able to change your task on the fly as needed for the different period closes. All right, so that brings us to our next polling question. And it is, which of the following cloud offerings is your organization currently considering? And I would say if you currently have some of these cloud offerings, go ahead and click on the one that you have as well. So we have Oracle, OneStream, Blackline, Anaplan, or others. And for those that currently don't have a cloud strategy, please go ahead and click on that one. Give you guys a few seconds to go ahead and do that. All right, and we'll go to the polling results. All right, so about 43% are using Oracle. 0 are using OneStream right now, which is somewhat surprising. So OneStream is a popular tool, so I find that very interesting. Blackline, 28%, a tool that's been around for a while, good tool. Anaplan, understood. Probably more on the planning and budgeting side, so I understand that result. Other 20%, you've got some other tool in place, and then back to our pretty constant 29% not using cloud tools at all right now. So, interesting results on the OneStream. Everything else that looks about in line with what I expected. So really, now kind of as we're coming close to the top of the hour, we'll pull together kind of my final thoughts. Really, the key thing is whether you're trying to do a process change to shorten the close or make the close more efficient, or whether you're looking for tools, the driver here is to eliminate or mitigate those manual tasks that are being performed by the people. Technology is typically the answer to do that, although process change can certainly help in that regard. You want to try to streamline your processes where you can, either manual process or using technology, and then try to get your people to be able to focus on what's going on with the data, and with, as we call it, value-add activities, not just those rote tasks where they're doing the same thing over and over. So once again, while some do require technical solutions, a lot of these are process-driven, so you can do process changes that will help you. If you need to build a business case, I would look at trying to identify where you can save people's time, how you can have them focus on those value-add activities, and that will help you drive that ROI. So that's really what I had prepared today. I think you've got the option of doing questions. Under the Resources tab on the left-hand side, there is also the ability for you to download a white paper that I wrote on this period close topic. You can access that. You'll be able to view this presentation at your leisure. We kind of went through some of these things quickly, but the white paper is a little more exhaustive. And once again, you can read it at your leisure.